Good afternoon, everyone. This is Mark here at TapeTally.com for your Week 16 recap. Let's take a look at the overall statistics for the week here, and the month so far, and the year to date. So basically, we saw the week here kind of similar to last week. We didn't really do too much on this spider here. We were just up just over 0.5%. Nasdaq was the underperformer this week, mainly led by the decline in Apple and its heavy weighting in the Nasdaq. Russell 2000 was up almost 1%. Dow Jones Industrial Average over 1%. Gold, so if we go through this list, basically everything was up a little bit, but nothing too drastic, except for the volatility, which obviously goes up and down a lot more than the market. So let's jump right into it. So right today, I'm going to let's just take a look at the market, see what kind of damage or gains we made this week. So basically the same thing. This blue line right here is just a 30 week moving average. I'll just take this off here. Alright, so we were here last week, and we're here this week. So really we haven't done too much at all. And that's basically similar to the majority of markets. I mean, the Nasdaq was down a bit more, but this chart is a bit skewed because of Apple. We look here, same kind of thing for drawing channel lines. Didn't really do too much. Last week we talked about gold possibly printing more of a bearish chart, but so far it's holding up. Hasn't broken really that long-term trend line from a falling top here, so keep our eye on that. Oil hasn't been doing anything. It's been stuck in a range since 2009 basically. Volatility, hard to see anything of value here because of this skewed chart, but it's basically chopping around this week. If you follow my VXX strategy, you'll see that the last 3 trades have been basically losses. I've gone long on the VXX on my last 3 trades, and they've been small losses. So that's kind of telling you something, that possibly the market does not want to go down. It wants to go up, which means the volatility will come out of the market. So we're kind of getting mixed messages here. Let's quickly take a look at the Canadian markets. We were up here, probably due because oil was up this week. So the Canadian markets will be up. So what I'd like to do, what I did is I scanned the market this week for abnormal volume on a weekly basis, and I took a look at some of the charts, and we'll take a look at some of the patterns that possibly some ideas for trading, either long or short. So we look at Altera Corp here. Let's just draw some lines here. You'll see here that this has broken down from a falling top. It broke its main trend line. Kind of broke its trend line here, right? And it's breaking down on high volume from this kind of a bear flag pattern. So that's one pattern to take a look at. I can trade that off the daily possibly. Take a look at QCOM. We had a runaway from the trend line and a strong selling last week. So that may be something to play. Texas Instruments. This one hasn't broken yet, but this one is sort of printing a longer term, I guess you could call that a pennant, sort of. I don't know, I'd scrap that one actually now that I look at it again. Let's scrap that one. Boston Scientific Corp. This one is a kind of a bottom fishing strategy kind of deal. If we're looking for something that may be printing a bullish chart pattern in the future, let's take a look at this, right? So we're looking for a break of this downward trend line, and then kind of a break on higher volume from with some extraordinary volume. Keep our eye on that one. Lattice Semiconductor, this one same kind of deal. It's printing this pattern. These are something that I may just throw in a watch list and just watch throughout the week and keep my alerts on it. You know, if it passes this $7 mark, I may bring it up on the screen, and there may be a tradable set up there. So, you know, looks like it might start to print a ascending triangle here. So we'll keep an eye on that one. This is more of a bearish chart pattern, kind of a blow off top. You know, here's the trend lines. As the trend line gets steeper and steeper here, you know, we had tried to make a new high, could not hold it, and on higher volume. So this may be like an emotional blow off top. Keep our eye on that one. Maybe we might want to short that for a trade. Lattice Semiconductor. Now this chart initially may look quite bearish, but if we draw some lines here, this you know, this 1250 range here, you know, we've bounced off it once, twice, 3 times, and on last week we had sort of a bounce here as well. So this, you know, we could have a bounce play here off of this level of support here. That may be a play. Sanofi Aventis. This one is potentially starting to print a sort of a pennant pattern here, where the bottoms are rising faster than the falling tops here. So this may lead to a breakout in the future. Keep our eye on that one. This one had an extremely large gap. So if we just take a look, I'll just bring the daily up here. You know, I had a large gap on whatever the 18th was. That's Wednesday, I believe. So that's why this chart is a bit skewed. But this may be one to, you know, get in on a pullback. You know, this one had a decent chart pattern. I don't think you could have gotten in on this one because it gapped, you know, from 65 right through up to about 85, right? So not much we could have done in between there if it gaps. So that may be one to take a look at, you know, if it pulls back here. Strategic Hotel and Resorts. This one is starting to print, as we can see here. Buyers are starting to take control again here, these rising bottoms, right? You know, this may be something to pay attention to. You know, if we can break this level here from ascending triangle. Titan Machinery. This one had a kind of a volatile week this week, a lot of volume in this one. You know, we could draw this many ways, but just draw this like this. And, you know, we sort of had a pennant here, I guess you could call that. And we had that break there. So this may be one that the momentum traders may want to think about. Let's take a look at Knology here. This one probably would have been better to get in, obviously, here, but it was printing, as you can see, these breakouts from rising bottoms here, ascending triangle, breakout on this candle right here. So I mean, well, last week I had a big gap up and everything, so it would have been best to get in here, but this one, I don't think it's bad risk reward here. You know, if you're buying here at 1942 with your stop below, I don't know what's that, about 1750. I mean, we've got basically blue skies once we break this level up here, if we break this level up here. So that may be one to take into account. Arbitron, this one is printing a correction pattern here for the time being, but as we can see, these rising bottoms, you know, we don't have to go that far even, we can just draw it here so it fits a little bit better. I mean, the bottoms are rising, the buyers are in control of this one on the long-term chart, you know, for over the last 2 years. Over the last year or so, it's been in a correction phase, but you know, if somebody's playing for the long term, you know, once it breaks this on some higher volume, maybe we can put that into our longer term accounts. Photomedics, this one is printing a, you know, actually it's probably best to show the rise in bottoms first. It's printing these rise and bottoms. There's a lot more volume coming into the stock, as you can see. So this may be one that may want to keep our eye on for breakout. So one thing that attracts me to a stock is volume. I want people to be excited about the stock or something happening in the stock, because that's where emotional decisions are made when there's a lot of volume in a stock. You know that there's not only institutions in it, but there's retail traders, and well, even the institutions are real people as well. So everybody makes mistakes, including myself. So you want to be on the hopefully on the right side of that. So that this is where I'm attracted to, wherever the highest volume is. That's basically where I want to be, whether it be stocks or markets, like overall markets or anything like that. Let's take a look at these ones. At Hudson Highland Group, same kind of deal. We could draw this right from back here. We're printing sort of a pennant pattern here. We're looking for a breakout here. This one has kind of been in this consolidation range since 2009. Hasn't really done too much. So this may be one to take a look at. Fidelity Southern. This one had its breakout already, although it really hasn't broken this chart yet. This is, you could draw it this way on more of a longer term, or we could be drawing sort of a channel here, like this. So either way, if it breaks this channel, that may be a possibility here, since we have a lot of room to the highest resistance point here, $18. Now, keep in mind, this is all about risk and reward, right? So if it's breaking here, you have to remember that this was a downward channel. So the risk is higher that it will fail, but the reward is probably greater. So everything in the markets is a trade-off between risk and reward, right? So if we go like back here and we look at Altera, if we're drawing, let's draw a couple of lines here. So let's say we use this as our kind of stop loss point at the top of this range, and we got in right here, right at the close on Friday. Okay. You have to think, let's say, I typically like to use 2 to 1. So let's say that's about what, $6. So we need about $12. So we need about $23, let's say, about there. That's about 2 to 1. 2 reward units for 1. So you have to expect that this is going to fail here, and then it's going to, or sorry, it's not going to fail. It's going to hit a level of support here, and then there's some room there. All right, let's take a look at another one here. Take a look at QCOM. Same kind of deal here. If depending, you would have to test the strategy, of course. I've done this on a number of strategies, but let's say, for example, if you're shorting it here on the weekly and you put the stop here, you've got 2 to 1 basically at this area here. So this may be a good one. So in essence, you have to weigh, even if you see a great setup, you got to look at the risk and reward of it all. The market, trading in the markets is a probability game. There's no certainties. It's not black and white. Anything can fail. Anything can happen. So that's basically it. So overall, market's still stuck in this neutral range. Not much has changed. Some of the breakouts are failing. Some of them are sticking, and there's some rotation, and basically the market's in kind of a choppy action. So be well aware and stay on guard. Trade well. Thanks. Bye.